Most people invest in stocks, funds, or rental properties. They watch the market every day, worry about ups and downs, or deal with tenants and maintenance. Here's what most people don't realize. There's a way to earn returns that can beat the stock market, without watching charts every day. And without dealing with tenants. Today, I want to talk about tax liens and tax deeds. So what are tax liens and tax deeds? When a homeowner doesn't pay their property taxes, the government still needs that money to fund schools, roads, and public services. To recover it, the government usually takes one of two approaches. First, tax liens. The government places a lien on the property for the unpaid taxes, and then sells that lien to investors. If the homeowner later pays what they owe, you get your money back plus interest. If they don't pay, you may eventually gain the right to take ownership of the property, or move it into a tax foreclosure or auction. Second, tax deeds. With tax deeds, the government sells the property itself at auction. The starting price is often just a small fraction of the property's market value. For example, if a homeowner owes $50,000 in property taxes, the auction might start at just $5,000. That's how investors can buy real estate at deeply discounted prices. So the difference is simple. Tax liens are about earning interest. Tax deeds are about buying property cheap. Why do investors use this strategy? First, the returns can be very attractive. Tax lien interest rates can range from 8% to over 30% per year, depending on the state. Second, the barrier to entry is low. You don't need hundreds of thousands of dollars. In many cases, a few $1,000s is enough to get started. You can sell the property for profit or rent it out for long-term income. Third, this is a long-term wealth strategy. Buying properties at low prices allows you to gradually build a solid real estate portfolio. And finally, it's more stable than stocks. These investments are backed by real estate. Even when the stock market goes down, you still own a real, tangible asset, and may continue earning interest. So how do you get started? First, learn the rules for tax liens and tax deeds in your state or county. Second, research upcoming auctions and review the property details carefully. Third, start small and gain experience. And finally, invest with a plan and scale over time. To sum it up, tax liens and tax deeds are a powerful and often overlooked real estate strategy. They allow you to earn interest and buy properties at discounted prices while building long-term wealth. If this is new to you, it's definitely worth learning more about. Let me know in the comments, are you more interested in earning interest or buying properties at a discount?